Hey everyone, Marco Lima here with the Lima Market Report. Let's talk about what happened in February and what we're watching for in March. The S&P finished last month with a modest increase. Large cap stocks showed resilience despite ongoing economic uncertainty. Strength was primarily driven by technology, communication services, and select consumer discretionary names. Investors continue to reward companies with strong earnings, pricing power, and exposure to AI. Well, the Nasdaq was slightly down for February, supported by continuous, issues with mega cap technology stocks. But earnings reports from major tech companies were actually good, exceeded expectations. So somewhat of optimism in the long term. However, the volatility increased late in the month and investors reassess valuations and future growth expectations. When we look at the bond market, February was more challenging. Treasury yields moved higher during the month, and economic data came in stronger than expected. Solid job growth and persistent inflation readings reduced expectations for an immediate Fed cut. And as bonds yield rose, bond prices declined, particularly in the longer duration side of things. Investment grade bonds experienced moderate pressures, and while short term bonds remain very stable. Let's talk about what's happening geopolitical, shall we? We have a war. And economically, inflation remains above the Fed target levels when you talk about local stuff. And it continues to be gradually lower. The labor market is tight, and consumer spending remains steady. These conditions have kept the Fed cautious about cutting rates too quickly, and investors are closely monitoring upcoming inflation reports and employment data for further clues on monetary policy direction. Geopolitical speaking, we are at war with Iran, as we know. There's some risks with that. The conflicts bring issues with trade overseas, influence supply chains, oil markets, and for the moment, this is Monday, and the market has largely absorbed into that. So looking ahead, there are both opportunities and concerns. On the opportunity side, corporate earnings have been generally constructive, and economic growth has been positive. But if inflation continues to moderate, markets could really respond favorably with that. And also sectors outside technology, including financials, healthcare, industrials, may offer diversification opportunities as valuations certain tech companies became stretched. On the concern side, high interest rates for the longer term could pressure both equities and bond prices. Market concentration remains elevated, meaning a pullback in a handful of large companies could impact major indexes. Investors should be also mindful of seasonal volatility and headline risk, primarily resulting from geopolitical stuff like this conflict with Iran. As always, maintain disciplined investment strategy and proper diversification remains essential. I would suggest you visit our website, mraadvisory.com, for further updates and schedule a one-on-one with one of our advisors for a personal look at your situation and see how all of this fit in your overall financial plan and portfolio. Thanks for tuning in and have a great one.